It's Thursday, January the 19th, and we'll start with some good news.
What's that?
We've talked about Santa Claus rallies in the past.
Yes.
If you look back in time and you take the last 5 trading days of the year plus the first 2 trading days of the new year, so it would have been 2022, the last 5, and then the first 2 days of January, 75% of the time, the markets track with if we've had a Santa Claus rally or not. And even though it was a small rally, 0.8% during those 7 trading days, we have a 75% chance of positive S&P 500, if you believe in those things, and I do.
A rally's a rally.
A rally's a rally.
Rally's a rally. Also, you could go and say the adage is how January goes, there goes the year, and how's the year's going. And
let's throw out yesterday. Is yesterday just a mulligan? It's a mulligan.
There's with the fact that inflation is really not here because what is being said politically, we'll give it a mulligan.
Okay.
We'll give it a mulligan. No, well, only joking on that. But how January goes, then the year goes. But we aren't surprised about the downturn that occurred yesterday or the fact that the market is down as of this morning when we're doing this video to you. It is where we expected it to be.
Yes, and we do expect it to be kind of a slogging for the next 3 months or so. So, but we do feel confident about where we'll be come the end of the year.
We both commented this morning on our show, if you had a chance to listen to us, about this week and what's going overseas in Davos. And it's interesting. It's head-scratching. It's beautiful to see. And
everybody has a private jet,
and so it's interesting. What started off this week as the most important thing that a lot of CEOs and executives and political leaders were talking about is geopolitics. At the end of this week, they're now talking about recession. So everybody that has come to the interview that we've seen is saying that we are in for a recession, whether it's soft, mild, hard, who knows, but a recession nonetheless. And data that we went over this morning, like the PPI and the manufacturing and that type of thing, is showing that things are slowing down. Microsoft, for example,
laid off 10,000.
10,000.
Jamie Dimon believes that the Fed funds rate will end up around 6%. So that's higher than what the Fed believe. So all of these things are being taken into consideration as we think about your portfolio and continue to look, at least in the short term, what makes sense. And where we are with your portfolios right now is pretty much makes the most sense, because I don't see a big rally coming in the next 3 months for sure.
No, and again, we're pulling data. We have data. We're looking at data both on the maturing of money in the first quarter, how much it is, where our opportunities are, and then where are the buying opportunities. Two adages, the Santa Claus rally in January, and we'll see where we go, but we do it each and every week because it is your money.
And your money matters. Have a great rest of the week, everybody.
See you next week.